Hi, my name is Pete Hahn, and thank you for watching this tutorial video. Be sure to visit www.hahn-tech.com for the full library of video tutorials. I hope this video increases your knowledge and helps you become more efficient with this topic, whether for home or work. Please support this channel by sharing these videos with your friends and colleagues.
Hi guys, welcome to the video. This is another video in our series called Market Technicals. In this series of videos, we're covering the major U.S. indexes and we're trying to identify areas where the market will find technical support or resistance. And I've been building some tools to help identify those areas and understand which areas are going to be the highest probability for the market to react. And let's go ahead and show you how to access this entire series of videos, Market Technicals. We'll go ahead and bring up a web page here, and we'll go ahead and type in, let's go to YouTube, and let's type in Hahn-Tech, and then you can see the first item right here that comes up. That's our logo, Hahn-Tech LLC. And we go ahead and click on this link right here, Hahn-Tech LLC. That will take us to the channel. And from the channel, you can go to playlists. And what you want to do is then click on view full playlist, because that will then allow you to select all of the videos from that playlist. So we'll go ahead and select view playlist. And now you can see all the videos in this series. And of course, the video that I'm recording now doesn't appear in this list because it hasn't been uploaded yet, but it will be shortly. So I wanted to show you guys first how to get to our Hahn-Tech YouTube channel, and also then how to access this playlist so that you can go back and view the other videos, because we have covered some very important things. Earlier in the year, we had the formation of a head and shoulders pattern on the major US indexes. And then we watched, as the video series progressed, how the markets responded to those technical levels created by that head and shoulders pattern. So if you're all interested at looking at a potential top in the market, you want to understand the head and shoulders pattern, and for that you can go ahead and review some of these previous videos. Okay, let's get back to our charts, and before we get started, let's go ahead and cover the disclaimer, which is that I'm not a professional trader. I don't trade stocks for a living. I develop software tools for traders. And so it's very important that you understand that nothing in this video should be interpreted as an advertisement to buy or sell any financial instrument. I'm not here to show you how to trade or how to make money trading. I'm here to show you how to build tools and how to use the platform to get the most out of it. Okay, so let's go ahead and take a look at my dashboard here that I've got. You guys are familiar with this from previous videos. And on the top, we've got the major US indexes. These are the futures for those indexes. And you can see that Friday's action, we shot up at the market open and then we flattened out. Well, I want to draw your attention here to the vol spread. That's what we call this, VOLSPD, with a dollar sign in front. That's the symbol. It's a built-in indicator that comes with Thinkorswim. You just type in that symbol on any chart. What's important here to note is that I've got an indicator that shows you it's a strong uptrend and also that it's reached a stall point. That stall point here is this gray line that you see. And as I move the cursor across here, you can see this cursor is synchronized across all charts. And so you can see as the vol spread went ahead and got above that gray line, that's when the market's flattened out for the rest of the day. Even though the vol spread continued higher, you can see that it got choppy. There's some red bars in here. And you can see that for the major US indexes on the futures contracts, we all stalled out right there. And also you can see these pink lines here. Those are my key resistance levels. And we can see that those levels were very active when the market reached those levels. Okay, let's go ahead and review the major US indexes. So, before we go any further, I know that you guys have a question that you want answered, and that is, how do I get this crosshairs to synchronize across all of these charts? So let's go ahead and look at that. We'll go to this hamburger menu here, and we'll go to Style. From Style, then we'll go to Settings. Okay, you can do this from any chart on the grid here. From Settings, we want to go ahead and select Synchronize crosshairs position. You see it's checked right here. Synchronize the crosshair position on all charts. That's a global setting. You set it on one chart and it applies to all charts on your platform. Okay, so that's how you turn that on and off. Great. I know I've had people ask me that before, and I wanted to make sure that I was able to show that to you guys because I know some of you are asking how to do that. Very handy tool. So let's go over to charts, and now we're looking at the market technicals for the Dow Jones Industrial Average. I'm going to go ahead and remove this trend line here, and this trend line is actually a channel, and this was for the previous head and shoulders pattern. Now that head and shoulders pattern was busted when we broke out to new highs right here. You can see this little point right here. And I don't really need this any longer because it's of no use, but you can see that if you did draw that trend line channel, then you'd be able to identify when this market started to break down. So we'll go ahead and clear the drawing set. Now we've got a nice clean chart, and all that we're looking at here is we've got one alert here at 25,739, and then we've got the indicator that's marking up my chart. You can see the blue line is 52-week highs. I'll just explain that to you. What is this dashed yellow line at the top here? That is a very important level that we want to identify, and I've built a special indicator that keeps track of these market corrections, and then it uses Fibonacci levels, and in particular in this case this is a Fibonacci extension, and what it does is it takes the previous price structure of the price correction and then projects through Fibonacci extensions where we are most likely to top out or find resistance levels where buyers run out of steam and the sellers take over. As in case in point right here, 1127, we reached up and touched that line, and look at that, we pulled back very strongly. That was this week. We pulled back very strongly, and then we immediately started seeing buying come in. You can see the strength of that bar with that big wick down at the bottom, that big tail at the bottom of that candle. That's very strong buying, and then we continued higher. So what we want to do is we want to look at this level right up here. It's right about, well, it's right there, 28,174. We'll call it 28,175, right? We'll just round that up to a whole number there. And what we want to do is we want to see in the coming weeks, do we get above this line? And then you're probably asking, well, where's the next line? And how do we identify that? So let's go ahead and scroll back here a little bit on the chart so that you can see the indicator that I've created. And what it does is it keeps track of these market corrections. Market correction is 10% or more from a previous high. And so we've got the previous 52-week high here, and then we drop down a 10%. So you can see the 10% level, and we bounced pretty strongly. You can see these Fibonacci levels begin to plot as soon as we get a market correction. And you can adjust that percentage in the indicator, but this indicator is not ready to be published yet. I've got a lot more to add to this. So stay tuned for more videos. As I add more to this, eventually I'll be able to publish this along with my premium indicators on our website. So what you want to identify here is what happens when we get down into these deep, this is almost bear market territory here, and then it sprung back into action. And then you have these Fibonacci levels. You got the 61.8 and you got the 50% level, right? These two lines right here, the blue and the magenta. And so you can see here that we stalled out on our first attempts to break through that zone that's called the ambush zone. Whenever you draw a Fibonacci during a big market move like this, then that 50% and the 61.8 become what's called the ambush zone. So we've got to make it above this zone before we can make new highs. That's just the structure of the market. Also very important is this 78.6 line. If we don't get above that 78.6 line, there's no way we can make new highs. But if we can get above there and hold, you can see that it leads to a high probability of making new highs. You see how that worked out. Okay. Now the other thing I want to show, let's go ahead and move this down a little bit so we can see more of what's on the chart. And here you can see we've got the 123.6 Fibonacci extension. That's that line that I just showed you where we recently topped out. Then you got a 138.2 and a 161.8. There's another level up here above that. That's the 200% level. Now I've explained many of these levels in previous videos, so I'm not going to go into tremendous detail here, but suffice to say, what we want to do is go forward in time now and look at the current chart. And so here are your next levels that you want to be watching. If we make it above the current 52-week high, which is here at this yellow line, then you want to be looking at this level here, the pink line, which is 28,953. Now you want to round that to a whole number because the market, especially the Dow Industrials, really loves those big fat round numbers. You know, like 3,000. Look at 3,000 is right up here. You think we can make that by Christmas? I don't know, just a couple of weeks away. But these are levels that are going to be in play if and when the markets make new all-time highs. Now, how do I know that? Well, I know that because we can look back using this indicator in history and identify how the market has behaved previously. Now, of course, history does not guarantee future performance, but it does contribute to the probabilities. So let's go ahead and switch over to a weekly chart where we can get some more data on the chart. Let's go ahead and change this to, let's see, instead of 3 years, let's go back 15 years. Okay, and the indicator automatically plots each of these levels each time that there's a major correction. Now, and we want to go ahead and take note of this one in particular. This is the 2008 market crash. Okay, so we got down below the 20% level and we tried to rally back, and you can see that strong resistance was here, and then we just collapsed. All right, and so, but these Fibonacci levels were in play during the whole time. You can see as the 52-week high reset at this point here, these lines drop off because now we're far enough away that these levels really should not be in play. But guess what? They are. You can see here, remember I told you about that ambush zone, the blue line and the pink line? So we can scroll forward just a little bit and we can see how that actually caused the next market correction after we came out of that nosedive in 2008, 2009. So you can see how that ambush zone was very important. So then we had that correction, and guess what? It starts a whole brand new set of lines. Now we've got the 161.8. You can see that was resistance right here. We pulled back down to the 123.6. Then we finally had some energy here to get up to the 200% Fibonacci extension from this market correction, and then we topped out again. So we move forward a little bit. Again, this is not guaranteeing how things are going to play out in the future. This is just lending support to the probability of how these levels are going to impact the market's future performance. And we can go up here and you can see the 200% level was very strong resistance here. You can see how many times it hit that level before it finally got up and over. And so we can continue on, and then we can look here at the next correction and how those levels then reset and how the price action responds accordingly. And again, we have another new all-time high here. This is a 52-week high trailing upward. We had very little resistance here at the 161.8. We had considerable resistance here, and then we continued higher. So you can see how these Fibonacci extension levels are very important in previous market action. Let's go ahead and look at some of the other indexes. We'll go ahead and change this to major US indexes. Let's go ahead and look at the NASDAQ. And again, we'll do the same thing. With the benefit of hindsight, we'll examine how these levels impacted the market. Okay, so let's just take a look at that. Okay, and I'm not going to explain anything. I'm just going to pause it here. You can pause the video and you can study these levels and understand how the price reacted at these Fibonacci extension levels over and over and over again. Okay, this is very, very important that we understand how these Fibonacci levels are going to impact future market performance. And you need to apply the Fibonacci levels in an intelligent way. So you need to have a significant move and you need to understand how those structures develop. Okay, so let's go ahead and look at the S&P. We'll scroll back in time here so we can get some hindsight on this. And again, you can see how these levels are impacting the price performance of the major US index. Okay, so I don't want to go into too much detail here. Again, you can pause the video and examine these levels for yourself to gain confidence and understand how these Fibonacci extension levels are going to impact the market. Now here's the Russell 2000. This is the one that's been languishing in correction territory for a year now. Yes, this is the previous correction. So you can see the ambush zone was in play a lot here. The chart just got really, really messy. And you can see here, this is the key level that you want to look out for if you're playing the Russell 2000. This is the 78.6, that dashed yellow line. We have not yet made it above that line, but look at this. We've reset now. The 52-week high has reset, and so now that yellow dashed line is going to drop off and wait for another correction in the Russell 2000. So you can still keep an eye on these levels here. The 78.6 is going to be key level. We need to get above that before we can make new all-time highs on the Russell 2000. And then you can also identify some other levels here. I'll just move this down so you can identify these levels and mark them for your own notes. Okay? Great. So like I said, this is a work in progress. I've got a lot planned for this. I want to build scans into this, and I want to do some other things that I'm not going to mention until they're ready to publish. But I just want to let you guys know that I'm working on this, and your feedback in the comment section of the video will drive the elements that I add to and build into this indicator. So by all means, if you want to see something that I haven't included yet, speak up. All right? Great. So that completes our review of the market technicals for the major U.S. indexes. Let's go ahead and examine some of the trades that I've got, and then we got some bonus material coming, so you want to stay tuned for that. Okay, so we're going to switch our charts over here to the ones that I use to track my long-term buy and hold strategy. I wouldn't say buy and hold. Let's rephrase that. We'll call them swing trades, okay? Swing trades, and my plan is to buy stocks that have momentum moving higher so that I can sell covered calls against them when they hit points of resistance. So you can see I purchased this stock here down at $18.95. I collected a dividend of $18.50 because I've got 100 shares of that. And right here at this weekly resistance level is where I sold the first call against this position. And you can see that once it hit that weekly resistance level, it pulled back a little bit and I collected premium on that covered call. We'll go ahead and switch this over so we can look at our open positions. Guys, I want to show you something in Thinkorswim that I have not covered in a previous video. This is called ThinkLog. And how do you get there? You go to Tools, and then you select ThinkLog from the list of available screens on the Tools tab. Okay, it's called ThinkLog. And I've got a screen already set aside to examine. Let's go ahead and bring that up so that you can see some of the stocks that I wanted to show you. Now, it's very difficult in Thinkorswim to understand how your collected dividends and the premium that you sell when you sell a covered call, how does it impact your adjusted cost? Now, I've used cost basis here, but this is not for tax purposes. But when I say cost basis, let's say I bought Key, K-E-Y, I bought 100 shares at $18.95. I sold a call at 70 cents. That's $70 I collected for that at 100 shares. The cost basis then was reduced to $18.25 and a half. Then I collected the dividend of $18.50, so my actual cost right now is $18.07. So let's go ahead and minimize this and look at this again. $18.07 on the chart is right about here. We'll draw that line right there, okay? I got it at $18.09, it's $18.07. So that's where I own that stock right now after you account for the premium that I collected on the covered call and the dividend that I collected while holding the stock. So my true profit really on this position is from $18.07 up to its current price. See, where I purchased it was $18.95. I purchased it right up here, okay? So the difference between this price level and this price level is the premium that I've collected while holding the stock, okay? Let's go ahead and look at some of the others really quickly. And because I wanted you guys to understand how I'm doing my swing trades and how I'm selling the covered calls into resistance and how it's working out for me. Let's go ahead and look at CTL. That's another one where I bought at $13.31, sold a call at 7.75, adjusted the cost basis, and then we have the dividend collected a $25 dividend. So now my cost basis on this one is $12.31. So let's go ahead and bring up a chart of CTL. We'll go ahead and bring up the line tool and we'll go to 12.31. We'll draw a line right here. This is where I purchased the stock up here at 13.31. Okay, so the difference between where I purchased it and this price level here is the amount that I've collected selling the covered call and collecting the dividend. So even though it pulls back, even if it pulls back to $12.50, I still want to hold this position. Why? I'm making 7.1% yield, okay, at the current price. If we adjust that based upon my current cost basis, $12.31, I'm making significantly more than 7.1%. So I want to hold this, and I want it to go back up and make a new high where I can sell another covered call into resistance. Okay, we'll take a look at one more because I don't want this video to go too much longer. I've got bonus material that I want to cover. So let's look at Goodyear Tire. This one, I've actually sold a call. So I bought it at $14.80, sold a call at $75, bought it back at $35, so I collected $40 and locked in that profit. Then I sold another call as it hit resistance, $1.05 on that one, reducing my cost basis further, then collected a dividend. You can see how this goes on and on and on, and you almost need a spreadsheet to do this. And you can actually export. If you click the hamburger menu on this, you can export to file, and it will export it to a spreadsheet. Okay, so just keep that in mind. So ThinkLog tool is a great tool for keeping track of your cost basis or any other thoughts that you might have about individual stocks. And it's really easy to organize everything right here in the platform. You have access to it no matter where you log in to the platform. All right, so let's get back to the stock. We're looking at Goodyear. Cost basis $13,195. Let's bring that up on a chart. $13,195. Goodness, that's way down here. Look at that. 13,198. We'll put it right there. And where did I buy it? At 14.81 roughly. Okay. So the difference between where I purchased it and where this price level is, that is all of the dividends that I've collected and the covered call premium that I've collected. And you can see that I sold the covered call right up into this area here, this weekly resistance level, and it worked out fabulously. And in fact, it worked out so well that I was able to roll it over and sell another covered call against it. And I'm making 4% yield on this at the current price. But look, my adjusted cost basis is $13.18. The more covered calls I sell, the lower my cost basis, the more yield I'm actually making on the capital that I have put to work. You get it? You understand? Boy, I hope that just really exploded in your brain right there. Just, that big aha moment to understand the impact of this and how this can impact your ability to hold a position long term and collect income on a stock while you're holding it. It's putting capital to work, and to me, in my mind, it's really getting the most bang for your buck. But again, I'm not here to teach you how to trade or how to make money trading. I'm just showing you what I do. Because why? Because when I published a video, someone said, hey, let's take a look at some of your trades. That's the only reason I'm showing you guys. I'm not showing you so I can teach you how to trade. I'm showing you because you, the viewers, have given me feedback that says, I want to see what Pete's trading. So here it is. I'm showing you this is what Pete's trading. So I've got a lot more to cover here, but I want to get on to the bonus material, which is going to be in today's video. We're going to be covering the changes they recently made to the scan. And they're very minor changes, but I've published a lot of videos and I've published a lot of solutions on our Q&A forum. And a vast majority of those are all based upon the previous scan screen. And I've made some changes, so I want to update you on some of these changes so that when you watch some of my videos or look at the Q&A forum and see screenshots, you can translate how it was before they upgraded it and how it is now and still be able to build your custom scans. Okay, let's go ahead and dig right into that. And here we'll go to the scan tab on Thinkorswim. Notice we've got the stock hacker selected, and that's the one that is in most use. That's the one I get most of the requests for. You can see that you can scan in your own personal watch list, or you can scan by a certain category that's built in. In this case, I've got mine set to all optionable. That's one way to eliminate the over-the-counter stocks. And you can even, if you want to really refine this, when I'm doing my swing trade scans, I go ahead and select weeklies. And we'll show you how to get to that. Right here. Okay, it's a public filter and it's weeklies. What that means is these are stocks that trade weekly options. And if you know anything about options trading, if a stock trades weeklies, that means there's significant volume in the options of that stock. And what it also means is that there's tremendous institutional support for those stocks because they trade the weekly options. What does that mean? That means that the technical levels are going to be more impactful. In other words, that 200 period moving average, that is going to be very important for a stock that has weekly options versus a stock that's way out in left field that nobody's watching and doesn't trade any options and no institutional support. The technicals are just not going to work as well for those stocks. Okay, again, this is not trading advice. This is not financial advice. This is just the way the world is. Okay, so let's go ahead and look at this. Now, in addition to your scan in, you can intersect with. Okay, so you can select multiple layer, and I call this the top level filter. Okay, this is the top level filter. I get a lot of requests in the Q&A forum for folks that want to scan against their own watch list. And you can also scan, let's say you want to take all optionable, but you want to do only NYSE stocks. Boom, there it is, your top level filter. Now you're only looking at stocks that trade options and are listed in the NYSE index. And you've got all these others to go ahead and explore and pick from. Let's say you wanted to do the Russell 2000. There's the Russell 3000. There's the Russell Index. No, we don't want the Russell Indexes. Where's the Russell 2000? There it is. You got the Russell 1000, the Russell 2000. You got all these things in here that you can pick from as your top level filters, so you can pick and choose. Now let's get on to talk about the different types of filters that you can add to a scan. It used to be buttons up here, okay, where you see all of the following. It used to be buttons up here. So now you go ahead and you add filter. So you see over here in the upper right, add filter. Now you can add a filter for a stock. So let's say you want the last price of the stock to be greater than 10 bucks, okay? And maybe less than 100, okay? Let's say you wanted to add a fundamental filter. So you go ahead and add that in there. And guys, I just got hung up on this trying to do it right here on the video, but if you just click and drag this little bar down here, then it will allow that to expand. That area was not expanding, and so I had to just kind of put the mouse over this until I got the double arrows and then click and drag that down, and then it expands when you add a new fundamental. So from here you can add all kinds of different things related to the fundamentals of a company rather versus as compared to the technicals. And let's say you wanted to add a study filter. This is the one we get most common requests to perform here, and that is what you can do here is select custom, and then you get the code editor, and then you can either build using the condition wizard, and we've got 2 videos on this condition wizard, so you want to go ahead and look at our channel and find those videos on the condition wizard, because you can build your conditions here with simply clicking the mouse. Let's say you want a study, ADX crosses above a value of 20. Boom, there you go. And let's say instead of the ADX, let's say you wanted the DMI. All right, so you select study and you type in DMI right here in the search box, and you select DMI, and you want to select DI plus, DI minus, ADX, any one of these 3. Crosses above, pick your level. Boom, hit save. There, you've added your condition. When you hit scan, it's going to find stocks that have crossed the DI plus above 20. Okay, that's how the study filters work. You want to select your time frame. You select your time frame here. These are the only time frames supported for study filters on a scan. I get a lot of requests that want to do scans for tick charts and range charts, and we just can't do it. This is our list. This is what we have for options on doing scans in Thinkorswim. Okay, we'll go ahead and hit OK for that. So then you have this, right? You got add condition group. All right, let's say none of the following. This is brand new. We never had this ability. We've actually had requests in the Q&A forum for this, and that is, how can I build criteria that I want to exclude from my scan results? So here you go. You've got here, add a filter for this condition. This is none of the following. So you can see here you've got this section up here, which is all of the following, and all these 3 items will be combined together. That means the stock is above 10 and less than 100. The fundamental, whatever you might set here, not going to mess with that. And then the study filter. And then let's say you want to add something for none of the following, and then you just add whatever it is that you want. Let's say you don't want to see stocks that have, let's say, price to earnings ratio. There you go. So we want to exclude all stocks that have earning PE ratios that are negative. Okay, so that's just an example of how you can apply that. There's a whole lot more you can do with this, and I just wanted to go ahead and review some of these changes for the new upgrade that they did to the scan tab. This was a few months ago, and I'm just now getting around to sharing this with you guys. Okay, that's it for our bonus material, and that concludes this video. Thanks a lot for sticking around, guys. And again, I want to encourage you to leave comments in the comment section below the video so that I get feedback from you and understand where you want me to take this series of videos and how you want me to build these indicators for you. And I want to make sure that I get feedback from you so that I'm building something that you guys find useful and valuable and helps you become a better trader. Guys, thanks a lot for watching. Take care.
Thank you for watching this tutorial video. Be sure to visit www.hahn-tech.com for the full library of tutorials. I hope this video increases your knowledge and helps you become more efficient with this topic, whether for home or work. Please support this channel by sharing these videos with your friends and colleagues. Thanks, and take care.